Markets failed to sustain opening gains in the final three trading sessions of 2025. The Nifty slips below the 26,000 mark, dragged lower by IT and financial stocks. Metals buck the trend, outperforming with gains ranging between 2 to 10%, although they too are off the highs of the day.
No stopping the silver sparkle. The precious metal surges past the $80 mark before witnessing some profit-taking in Asian trade. Gold prices cool off 0.25% on hopes of a Russia-Ukraine deal after talks between President Trump and Zelensky in Florida.
Coforge has had a very volatile trading session after its mega AI acquisition of Encora for around $2.35 billion. Brokerages have retained a positive stance. Kotak says that Encora is a good asset but pricey. Morgan Stanley calls it a bold move but adds that earnings may get diluted in the near term.
Timex under pressure as parent Times Group set to sell another 9% stake in Indian entity via an OFS. Meanwhile, John Cockerill surges after promoter sells 5% stake in open market. Veteran investor Ramesh Damani picks up 0.5% via a block deal.
Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormas Patakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon. The final 3 days of 2025.
Good afternoon, Hormaz. Absolutely. Final three trading sessions, 3 days of this year. And the market's not doing much. Already in holiday mode at the low point of the day right now.
Oh, well, a painful grind lower, if you can say that, because over the last week, the index did make attempts to cross that 26,200 barrier multiple times, but could not sustain. And ever since then, it's been this slow grind lower. We first broke below 26,200, then 26,100, and today, now we have broken below that mark of 26,000 as well. Of course, they're still trying to get back to those levels. They're still around 40 points away as of now, but at the lowest point of the day, 80 points lower is where the index currently stands. Tomorrow being the monthly expiry, the final expiry of 2025. So that needs to be taken into consideration as well. And for the Nifty Bank, well, the 38.2% retracement level of 58,890 is now gone. 58,850 is where the index currently stands. So it will be interesting to see where the next levels, the next support levels lies. And Sudarshan earlier in his FNO check was pointing out that 58,800 will be a very important support for the Nifty Bank on the downside. So we'll keep an eye out on both the Nifty and the Nifty Bank. For now, both of them at the lowest point of the day.
Absolutely. Nifty below that 26,000 mark as we speak. And the advanced decline ratio clearly in favor of those declines. We've got 2,136 stocks declining and 802 stocks advancing. But if we take a look on the upside, we've got those metal names which are clearly doing very well, but they've also come off their highs. Hindustan Copper is about 3% higher in trade, but it's 9% off its highs. And other stocks like SAIL and Tata Steel also doing well, about 2% in the green. Now, the PSU banks have moved into the green, although very mildly. The index is marginally higher. We've got Bank of Maharashtra and Canara Bank clearly in the green, but PNB, which was in the green, is now in the red mildly. But some of these IT names continue to lag. Persistent Systems, Emphasis and Infosys, all of them in the red, over 1% lower. Finally, that rally that we saw in railway stocks, IRFC, RVNL, ERCON, all of them seeing some profit booking after that stellar up move last week.
Indeed, and Hindustan Copper is one name that Arundhati highlighted. If we can pull up the off days high chart, that will give you an idea of how much the stock has cooled off from the highs. Remember, in the pre-open session, the stock was up 14%. So that intraday high that you see of around 535 odd, that is from the pre-open session. That is where the stock had opened up. Then for a better part of the session, the stock was up around 7, 8, 10%. But now it's a 10% cool off from the highs of the day. At one point, the market cap had crossed 50,000 crore as well. But now with the prices in the global markets coming off, it's having a bearing on the stock price as well.
Absolutely. And the other stock that's been on our radar last week as well was Coforge, which announced the acquisition of US-based engineering services company Encora in a $2.35 billion all-stock transaction. The annual revenue of the combined entity will be $2.5 billion, and the management calls it a defining moment for the company. But is the deal too expensive? Rima Tendulkar joins us with more. Rima?
Thanks so much for that. I think that is the big question everyone is asking. Is this deal between Coforge and Encora expensive? Well, the short answer is it's a good asset, a great asset, but perhaps a tad bit expensive. Now, Coforge is paying $2.35 billion for Encora. This is a company with estimated revenues of $600 million, which means the acquisition is being done at an EV to sales of 3.9 times. Now, putting that in context, most global digital engineering companies today are trading in lower multiples. Now, this I picked up from a Motilal Oswal report where they're saying a company like EPAM is trading at 2 times sale. Globant is trading closer to 1.3 times. And even some of the recent M&A deals were cheaper. Now, Cognizant acquired Belcan last year at roughly 1.6 times EV to sale. Infosys bought Intech at about 2.6 times sales, which raises the valid question, has Coforge paid a premium? Especially when you see it in context, analysts point out to Encora's organic growth, which is slow to 7 to 8%, while Coforge itself has been growing much faster at mid-teens. Now, JM Financial summarizes by saying the valuation looks rich given Encora's 7 to 10% growth profile. Now, moving on, when the price is high, there is also very little room for error. So what are the risks? Well, I can see 3 of them. One is integration risk, because this is a very large acquisition, the largest done by an Indian company. Encora is more than 30% of Coforge's size compared to the earlier deals like SLK Signity, which were smaller. So when there is such a large asset, integration is not the easiest. Secondly, the management is also guided for the acquisition being EPS accretive by FY27, but this requires flawless execution. The second risk is dilution risk. It's an all-stock deal leading to 21.25% equity dilution for the existing shareholders. And on top of that, Coforge has the option to raise an additional $550 million via QIP to retire the debt. As of now, it's not decided by the management whether they will flex that option, but it's still an overhang. And the third one is the overhang from private equity investors. Encora shareholders will hold about a 21 to 22% stake in Coforge, and 50% of this will unlock after 6 months, the remaining after 12 months. Analysts say that this is a potential supply which will cap the near term. But it's not all negative. There are some real positives here. Now, post-deal, Coforge becomes a $2.5 billion revenue company with EBIT margins of close to about 14%. The management is calling this a defining moment in Coforge's journey. And there is a clear step change in the company's capability. Encora brings AI-led product engineering, and the combined company will have nearly $2 billion of AI-linked revenue. The deal also opens up high-growth white spaces for the company like high-tech and healthcare, and the revenue synergy potential is significant, especially through cross-selling, and Coforge does have a very strong execution and an M&A track record, which gives the street some comfort. From a stock perspective, just over the last couple of days, the stock had declined close to about 10%. So some of the concerns are being addressed. But other than that, it's been such a wealth creator. Its 3-year revenue run rate the stock price return is 120%. In the last 5 years, it's more than 1,000%. So it's a bold, transformational acquisition by Coforge, and now it's up to them to deliver on that.
Yes, the ball is in their court now, as Reema said. Thank you, Reema, for breaking that down for us. It's been a very, very choppy session for Coforge. Opened higher, then gave up those gains, then saw a recovery, and then again is back at the flat line as we speak. Listen into what the management had to say about this acquisition.
The acquisition of Encora is a defining moment for our organization. And I mean a defining moment. Born in the Silicon Valley, California, Encora is one of the select technology services firms with an AI-native DNA that provides software engineering services for digital native companies and Fortune 1000 enterprises. Encora works at the convergence of AI, cloud, data, with service offerings that span intelligent process design, agent-native product engineering, core modernization, AI foundation, data readiness, and AI ops.
From financials perspective, the consolidated turnover of Encora Group for financial year 26, the estimated number, and they follow April to March financial year. So estimated number for financial year 26, revenues are around $600 million. And adjusted EBITDA of the firm is 19%. With Encora's current margin profile and the anticipated synergies that we see in the business, And the combined business is expected to operate an EBIT margin of 14% post amortization of intangibles that will be created as part of the purchase price allocation for this acquisition. Despite the primary infusion, the deal is not expected to be EPS dilutive on a consolidated basis because of the strong margin profile of Encora and expected synergies from the two businesses, that is Coforge and Encora, coming together.
Let's shift our focus to the metal space now. Manisha Gupta joins in to discuss about the volatility in the metal space. We've got gold and silver that's come off their highs, but we've got platinum and copper near their record highs. Manisha.
Well, we may be at the absolute end of the year, but the volatility and the price moves in the commodities just about continues. In the precious metal space, I'll start with silver, where we have seen yet another all-time high in the day today, where we did see $81 an ounce come in for silver as well. With that, this is the best annual gain since 1979, and we have seen 175% of gains come in for silver. If you look at the overall market, where it really has been about the deficit for a fifth straight year, strong industrial demand, 60% of all silver in utilization comes in from industrial markets now. Investment demand, very strong speculative money flowing in. The ETF buying has been on the higher side as well. And then China talking about putting export restrictions from 1st of Jan 2026 have led to silver prices surging higher. Another one is platinum, also trading at an all-time highs of $2,500 an ounce. This one has seen the best annual gain ever, with nearly 176% put forth. Third straight year of deficit into the international markets, with expectations that going forward you could be looking at very strong demand continuing from European Union as well. You have gold prices trading around $45–50 an ounce. All-time high yet again, 72% of gains in this year, and the best annual gain since 1979 on the back of strong investment buying. Central bank buying expected to hit 800 to 900 tons in this year. Geopolitical tensions, rate cuts, all of that supporting gold prices as well. And then you have copper trading at an upper circuit on MCX, is trading at an all-time highs on LME, in Shanghai and in US as well. This is on the back of slower output from Chile, Peru, Indonesia, and markets anticipating that after this year, 2026 could also be an year of global deficit, has been supportive for copper. No new major mines coming in, inventories continuing to decline, and then strong demand from renewable energy sources have been very supportive for copper, which is up 50% on London, but 70% higher in the Indian markets right now.
Manisha, thank you for that update. It's turning out to be a very, very volatile day for a lot of these metals and metal stocks as well. Take a short break. More news and updates follow on the other side.
Welcome back. It's still with us on Business Lunch. Amidst the severe apprehension that the recent change in the definition of Aravali may be unchecked and lead to unregulated and illegal mining, the Supreme Court took suo motu cognizance, and a 3-judge special vacation bench heard the case earlier today. Let's go across to Ashmit Kumar for all of those details. Ashmit, take us through what transpired in court.
Well, there's been a huge degree of debate ever since the November judgment or November order of the Apex Court, which had prescribed that definition of 100 meters north. That's the only those will be the only hills that will qualify as the Aravali Hills. Now, subsequent to that public outrage, the public debate, suo motu cognizance being taken off by the Apex Court, and Supreme Court, a bench, in fact, headed by no less than the Chief Justice of India himself, made some very pertinent observations. Number one, the court observed that there appears to be a structural paradox that whenever there is such an exclusionary definition that is introduced, does that then mean that indiscriminate mining would be allowed in the areas that do not meet the threshold of Aravali range? Also, questions being raised about whether or not there are gaps that are created through this definition, gaps that are created in the Aravali range, which would be fit for indiscriminate mining. And if the mining were to take place, what would be the economic ecological impact. The concern that was weighing on the mind of the apex court is that the ecological integrity of the Aravali range needs to be maintained. There can be no two ways about it. And with that in mind, the Supreme Court issuing a two-part order. The number one, hugely important, the November order of the apex court that had prescribed a threshold of 100 meters, that only hills above 100 meters will qualify as Aravali range. That order, importantly, has been put in abeyance. But that's only part one. The other part is that while there's been a lot of back and forth between government-led committees, between expert-led committees on what the definition of Aravalis is, the Supreme Court now saying that to have the final word, we will now constitute a high-powered committee. The high-powered committee is again being constituted by the apex court. That the mandate of this high-powered committee is to again look at what is the definition of the Aravali range, if there are regulatory gaps that are created that would be fit for mining, and if mining were to be allowed, what would be the impact of this? All of these questions now need to be considered by the high-powered committee, but importantly, that one contentious definition of 100 meters, that threshold of 100 meters, now has been put in abeyance by the apex court. The next hearing in this case, we understand, will be in January of next year.
Interesting developments there from the Supreme Court. But Ashmit, the court was also hearing a plea filed by the CBI challenging the Delhi High Court suspension of the life sentence of Unnao rape case accused Kuldeep Sengar. Give us more details on that.
Well, clearly this was a hugely debated topic ever since December 23rd, which is Tuesday of last week, when the Delhi High Court had passed a contentious order. In that order, the life sentence of former BJP MLA Sengar, the strongman from Unnao, his life sentence had been suspended. Now that led to public outrage, given as how he had been convicted for rape of a minor. Now, just to give the brief facts of the case for the benefit of our viewers, under the POCSO Act as it existed at the time of this rape that took place back in 2017, at the time, for rape, the punishment that had been provided was for minimum of 7 years, and in case this rape has been committed by public officials, then the sentence could go up to life imprisonment. The question, the technicality on which the Delhi High Court had granted relief to Sengar was that, look, under the definitions that have been provided under law, under the IPC, under the POCSO Act, MLAs are not public officials, and on that technicality, his life sentence has been suspended. Now, this was challenged by the CBI, CBI knocking on the doors of the apex court, saying that this is completely arbitrary, this is impermissible, that there needs to be a contextual definition of the MLA, that the contextual definition essentially is an official who enjoys significant dominance in the area, and that there can be no two ways about it. Sengar was the strongman from Unnao in Uttar Pradesh, wielded immense influence, immense dominance in the area, and therefore there needs to be a contextual reading. Basis that contextual reading, now we understand the apex court has stayed the definition, has stayed the relief that was granted by the Delhi High Court. So as of right now, Sengar continues to remain in jail. The relief that had come his way by way of suspension of life sentence now having been stayed by the apex court. The Supreme Court saying we need to have a contextual reading, we need to be aware of the facts of the case, and with that, the relief shot down by the apex court.
All right, Ashmit, many thanks for taking us through those details. But on that note, it is time for us to head into a short break. More news and updates on the other side. Stay tuned.
Welcome back. 2025 has been an epochal year for reforms, from GST rate rationalization onto the simplification of the Income Tax Act and the revised labour codes of the year. This was a landmark year of bold economic and consequential reforms aimed at aligning governance with the aspirations of a confident nation. Parikshit tells us how, in 2025, India shed layers of outdated laws, opened new frontiers for the industry, and simplified a number of archaic laws.
2025 will be remembered as a year when the NDA government, led by Prime Minister Narendra Modi, went all out with reforms to make the Indian economy resilient amidst global uncertainties. The economy grew by a strong 8.2% in the second quarter, beating all estimates. Here are 10 major reforms introduced in 2025 which have supported India's growth. Let's start with GST 2.0, which was the biggest reform in goods and services tax regime since the law was implemented in 2017. A simpler two-rate structure replaced the four-rate structure. A 5% and 18% tax slab was introduced, and certain sin goods were placed under a 40% slab. This reduced costs for the average citizen and also made compliance easier. Rate rationalization boosted consumer sentiment, and we witnessed record Diwali sales of over 6 lakh crore rupees. GST revenues in FY26 are expected to exceed budget estimates. The union budget delivered income tax relief for the middle class. This meant no income tax on individuals earning up to rupees 12 lakh a year. The old Income Tax Act, which had over 4,000 plus amendments, 819 sections and over 5 lakh words, was replaced with the new Income Tax Act, which has 536 sections and 2.6 lakh words. The much-awaited labour reforms consolidated 29 laws into 4 modern codes with a stronger focus on fair wages, smoother industrial relations, wider social security and safer workplaces. Reforms were aimed at higher female participation and reducing unemployment. What gives more flexibility to businesses is that no government permission will now be needed for layoffs and closures in establishments with less than 300 workers. The earlier threshold was 100 workers. The MSME definition was overhauled to allow investment limit to be increased 2.5 times and turnover classification to be increased 2 times. This meant that investment limit for micro enterprises has been raised from rupees 1 crore to rupees 2.5 crore. Turnover limit has been raised from 5 crore rupees to 10 crore rupees. Similarly, the investment limit for medium enterprises has been raised from 50 crore rupees to 125 crore rupees. Turnover limit has been raised from 200 crores to 500 crore rupees. Also, the credit guarantee cover for micro and small enterprises has been increased from rupees 5 crore to rupees 10 crore. Let's talk about the Shanti Bill, which stands for Sustainable Harnessing and Advancement of Nuclear Energy for Transforming India. This was passed by Parliament and has become a law. This ended state monopoly in the nuclear sector and allowed private and foreign investments in civil nuclear projects. The law has also laid down a pragmatic civil liability regime for nuclear projects. Under the Jan Vishwas law, over 200 minor offences have been decriminalised. Hundreds of outdated laws have been scrapped. The government is now working on Jan Vishwas 3.0 to decriminalise more laws. 2025 also saw FDI reforms. New insurance law has paved the way for 100% FDI in insurance companies. FDI reforms in insurance sector are likely to help attract substantial foreign capital and also enhance competition. Let's now talk about the new employment guarantee law of Viksit Bharat Guarantee for Rozgar and Ajivika Mission Act Grameen. This has increased guaranteed work days for rural households from 100 to 125 days. This is likely to strengthen village infrastructure and livelihoods as well. The government also implemented legal reforms with the Bharatiya Nyaya Sanhita law, which replaced IPC, or the Indian Penal Code of 1860, a colonial statute governing the country for over 150 years. This new law addresses 21st century threats like cyber terrorism, organized crime syndicates, economic sabotage and gender-based violence. It also recognizes digital evidence, mandates e-FIRs and enforces mandatory timelines for trials. Finally, the government has carried out a major review of quality control orders, removed mandatory compliance for 76 products and identified over 200 others for deregulation. This reduces regulatory burden for MSMEs and exporters. The government is now working on more next-generation reforms for ease of living and ease of doing business, and we will see their gradual rollout from the start of 2026.
All right, Parikshit, many thanks for those details, but let's just take a look at the markets before we close. The Nifty at the low point of the day, 100 points lower. The Sensex and Midcap falling in line. The Midcap actually doing worse than the Nifty and the Sensex. But with that, it is a wrap on this edition of Business Lunch. From Hormaz and me, goodbye and many thanks for watching. Midcap Radar takes all the action forward.